All right, my clock shows 10 o'clock. I think we can get started here. Good morning, everybody. I want to welcome everyone to today's webinar titled Understanding Form 990. The 990 can be overwhelming. It's a lot of information. Most people are only looking at it maybe once a year. What Carrie's going to do today is hopefully make it a little less overwhelming. She's going to walk us through the most relevant parts of the 990, the various forms, the additional schedules. She's going to highlight the most important aspects to help you better understand and utilize the information. I think she does a really good job including information that's relevant to everybody. So whether you're a donor, you're a board member, or you're a staff person reviewing the form. For our new viewers, I want to take a moment to introduce everybody here today. My name is Tyson Moore, supervisor at DWD. Joining us today is Audrey Sadison and partner Carrie Minnick. Just a reminder, so this webinar, it's live, it's interactive. For those of you who have questions during the webinar, please use Zoom's question and answer feature. You should see that button at the bottom of your screen. Audrey and I will be answering questions throughout the presentation. Also, today's slides will be emailed out to everyone after the presentation is finished. Okay, Carrie's got a lot to go over today, so I'm going to turn it over to her to get started.
Thanks, Tyson, and thank you everyone for attending today. Like Tyson said, we're going to go over Form 990 today and try and simplify it for all of you that are using Form 990, whether you be whether as an executive director or a staff person or a board member, or even maybe someone that just wants to find out some more information about a nonprofit. Form 990 is a very useful tool. So as I said, we have a lot of different people on the webinar today, and some of you maybe as a board member might not think that your responsibility relating to Form 990 is as significant as maybe an executive director or a staff member. But we need to remember as board members, one of your key responsibilities is ensuring transparency, accountability, and compliance with all relevant laws and regulations. A critical document that helps fulfill this role is Form 990. This is the IRS tax return for tax-exempt organizations. It not only provides a snapshot of your nonprofit's financial health, but also helps maintain public trust by making key information accessible to donors, regulatories, and the public. So what is Form 990? So again, it's an annual tax return that most tax-exempt organizations have to file. There is a very limited number of organizations that don't have to file it. Includes detailed information about finances, operations, governance, and compliance with IRS regulation. This form is available to the public, so we need to make sure that it is prepared correctly and filed accordingly. The Form 990 is designed to promote transparency regarding the nonprofit's financial activities, enhance accountability by showing how funds are used and how the organization is governed, and also meet IRS requirements for maintaining tax-exempt status. Because again, in order to maintain your tax-exempt status, you must file Form 990. So for board members, why is this form so important? Again, your role extends beyond just oversight of day-to-day operations. You must ensure that your organization complies with legal and regulatory requirements. Form 990 serves as one of the key tools for ensuring compliance with IRS rules and reporting standards. This form offers a clear picture of the nonprofit's revenues and expenses and assets, a description of the nonprofit's key programs and their impact, but also provides information about board structure, policies, compensation practices. So you'll see it's very different than a for-profit tax return. So by reviewing and understanding your organization's Form 990, both board members and all users of a 990 can ensure that the nonprofit remains transparent, effective, and in compliance with all relevant laws. So to begin with, there are really 4 different versions of Form 990. We'll start with Form 990N. This form is for very small organizations. So these organizations normally have gross receipts less than $50,000. Form 990 is a very small postcard. It just asks some simple questions about the organization's name, address, and if there's less than $50,000 of gross receipts. Organizations that have more than $50,000 of gross receipts, but less than $200,000, but also have to have assets of less than $500,000 can file Form 990 EZ. This is a simplified form version of Form 990. These organizations can file Form 990 if they so choose, but they don't have to. And then obviously organizations that have $200,000 or more in gross receipts or total assets of $500,000 or more are required to file Form 990. So you might ask, why would I want to file Form 990 if I can file Form 990N or the EZ? And that's because some organizations will want to file the full Form 990 because it does give so much additional information. And then this form is then submitted to grantors or funders to obtain additional funding. So there is sometimes a reason to file a different form than what you're required as far as the level up, because it does provide additional information. All private foundations must file Form 990 PF. So just kind of a quick oversight of the different versions. So you want to make sure that your organization is filing the correct version of Form 990. Also, the 990 must be filed electronically. It cannot be filed on paper. It's due the 15th day of the 5th month after the end of the organization's tax year. So for all of you December year ends, it's due May 15th. For all of you June year ends, it's due November 15th. You can file for an extension, a 6-month extension, if you do not have information ready to prepare the 990. Filing the extension is perfectly fine. It's not an additional fee normally, or there is not an additional fee to the IRS to file that. It's not necessarily looked on negatively. Lots of organizations do file a 6-month extension, maybe because they're getting their audit wrapped up or just don't have enough time for their board to look at the 990. So you can file the 6-month extension. However, you just want to make sure that you file that 990 every year. If you do not file your 990 on time, there are fines and penalties. But if you fail to file your 990 for 3 consecutive years, the IRS will take away your tax exempt status and you will no longer be considered a nonprofit. So please, please, please make sure that your 990 is filed. Unlike a for-profit returns, the 990 is a public document, which means that someone can come to your organization and request a copy of your Form 990 for the last 3 years. All the Form 990 schedules and statements you have to make available, except for certain portions of Schedule B, which we'll talk about in a little bit. Failure to provide this, there is a fee for those organizations that fail to provide a copy of your 990. So again, another reason to make sure your 990 is filed correctly and on time, because it is open for public inspection. So let's get into the key sections of Form 990. And we specifically are going to look at just the regular Form 990 today, because that's the form that most organizations file. So lots of different parts. We're going to start off with page 1, the summary of the organization's mission and finances. This is basically kind of an overview of the organization, financial highlights, mission, those types of things. So if we actually look at page 1 of the Form 990, the top part is like the header general information. But part 1, number 1 says briefly describe the organization's mission or most significant activities. So a lot of organizations will put their mission statement here, which is perfectly fine. That is a correct answer to put that there. However, you could also maybe not use your mission statement, but you could also describe what your most significant activities are if you wanted to. The key here is that this is really going to be the first sentence that the reader finds out about your organization. So when they first pick up your 990, this is probably the first thing they're going to read. So what do you want it to say? Another item on page 1 I want to point out is number 6, where it asks the total number of volunteers during the year. This is a question that I see answered incorrectly a lot of times. Sometimes people will put 0, or sometimes people will not put the correct number there. What the IRS is looking for is the total number of volunteers that your organization had during the year. So this should include your board members if they're not paid. So this number should actually equal the number of your board members during the year. For volunteers. And it's really important to answer this question correctly because it shows how many people are supporting your organization as volunteers. So I think it's a really good question and just making sure that you have that correct. Also, one thing that sometimes doesn't necessarily get done correctly is that the Form 990 needs to be signed by an officer of the organization. So an officer could be an executive director, or it could be like a board chair or a board treasurer. The key here is that it has to be signed by a current officer, which means the officer as of the date the 990 is filed. So maybe this 990 covers 2024, but it is filed in May of 2025. Well, you might have different officers. Maybe your officers switched at January 1, 2025. This form really needs to be filed by the officers that are in effect as of May 2025. So that is something to remember as well as you're completing your Form 990. So moving on to part 2, this is your statement of program service accomplishment. So this really talks about your mission and also your programs. What did you do during the year? So again, another question where they ask you your organization's mission. Now this piece right here, this question number 1, needs to be your exact mission statement that has been approved by your board of directors. So we don't want to manipulate this one. This one needs to be your actual mission statement. And it's important that your board review your mission statement occasionally to make sure that it is still accurate and that that is what your organization is doing. 2, 3, and 4 ask some additional changes or questions about changes during the year. So if you significantly changed your programming during the year, we need to answer these questions yes and tell the IRS what you did. When you initially registered with the IRS to obtain tax exempt status, in your application, you told them that you were going to do certain programming, and they approved your tax exempt status based on that programming. So if that programming should change, then we need to make sure that the IRS is notified of that because that's a change from your original tax exempt application. Also, if you do not notify the IRS of this, they could come back and say, hey, wait a second, you got a bunch of new revenue from this new programming that you never told us about, and it wasn't on your tax exempt application. And we really think that should be unrelated business income because it has nothing to do with your tax exempt purpose. So make sure that you do notify the IRS of any significant changes. And again, these are significant changes, not like small changes, not that you only served adults before and now you're going to serve children. That's not a significant change. But just significant changes, making sure that the IRS is notified of those. When they accept your Form 990, they're basically accepting that change. The next section here, number 4, this asks about your top 4 programs by revenue to explain what your program service accomplishments were during the year. This is basically your opportunity as an organization to brag about what you did during the year. How many people did you serve? How many programs did you offer? How did you impact the community? Oftentimes I'll see just the mission statement repeated here in this section. We really encourage our clients to take a look and take advantage of this, to really utilize this section to talk about what your organization did during the year. Sometimes your Form 990 is the only document that people will see of your organization. So this is a really good opportunity to share with them what you're doing and use it more of a marketing piece than an advertising piece for your programs, as opposed to just merely a compliance document. So, get maybe your marketing department involved to see if they can help out in this section. The next part is several pages, like 2 or 3 pages of checklist of required schedules. So not only do we have a core form of the Form 990, but we, as you can see here, have additional schedules A through R, that you might have to complete if your activities require you to do so. I have never seen a nonprofit that has to complete all of these schedules. Most organizations will have to complete the ones I have in bold here, Schedule A, B, G, and O, and we're going to talk about these a little bit later. But just know that if you have different types of activities and different types of transactions during the year, there may be some additional schedules that you have to complete and fill out as well. So just make sure you kind of scan through that section, making sure that you have completed all of the proper schedules. If you do not complete all of the proper schedules, the IRS is going to consider that your Form 990 has not been filed correctly and therefore not filed timely. The next section is very unique to nonprofits. This is a section where the IRS considers this the crown jewel. So in 2008, the IRS totally revamped Form 990, and this was a major section that was added on governance, management, and disclosure. So this is where we talk a lot about governance and your policies and procedures that are in place. So it starts off by asking on line 1A, the number of voting members of the governing body at the end of the year. So this is as of the end of the year. So this is not going to necessarily agree to the list of all your board members that are going to be reported on another page where it lists everyone that served. This is just as of the end of the year. It also wants to know of that amount, how many are independent? So independent means that they're not being paid by the organization. So the IRS likes to see a board that is very diverse and that is independent, as well as number two, when they ask if any board members have a family or business relationship with each other or with the executive director. Again, the IRS thinks that a nonprofit is more well managed if they have a very diverse board that is not related. It feels that those organizations that either have a family relationship or a business relationship will succumb to groupthink, and you won't get the diversity that is really needed to be successful as a board. You can have obviously related parties. You just have to disclose those on the Form 990. Line 4 asks if the organization made any significant changes to its governing documents. So again, the IRS initially approved your tax exempt status based on certain items that you told them when you applied for tax exempt status. So if you changed any of your bylaws, we really need to disclose those to the IRS. You do not need to provide a whole copy of the bylaws, but we do need to explain what the changes were made. Line 5 is an interesting question when it asks about the organization becoming aware during the year of any significant diversion of organization's assets. That's fraud. The IRS is asking you if you are aware of any fraud during the year. And so if you are, there is a specific dollar amount, and you'd be surprised at how much it is. It is a larger amount. I forget exactly what the dollar amount is, but it is a pretty big amount. So if you were aware of any fraud within the organization, you do have to report that to the IRS. Number 8 asks about board meetings. So actually, the state of Indiana law requires nonprofits to have a board and to have meetings and to also document those meetings, which means you need to maintain written minutes. The IRS is also asking you if you are documenting your meetings. So do you have written meeting minutes? Not only for the board of directors, but also for the committees. So hopefully that you do, but if you don't, that might be something to consider that you start doing, because obviously the IRS is asking you about it. So you want to make sure that you can answer that question, yes. Continuing on with the governance section, the crown jewel section of the 990, the IRS asks about several different policies that are in place. Now, these policies, as you can see at the top here, says that they're not required by the Internal Revenue Code. However, the IRS is asking about them. So if they're asking you about them, it's probably something that you want to have in place. Now, these policies, in order to answer yes, you have to make sure that these policies are in written form and were in place during the year. So if you decided, oh, we don't have this policy, let's just quick put it in place, it's in place now, that doesn't count to answer yes. So again, we need to answer it yes if we had these policies in a written form during the year. So a few of them that I want to go over. The first one is, has the organization completed provided a completed copy of this Form 990 to all members of its governing body before filing the form. And then it also describes the process as to how you review your Form 990. So you really should have a policy in place that says how your organization is going to review Form 990. So a lot of organizations will have an outside auditor, CPA, accountant prepare Form 990, which is perfectly fine. But how does the board, the internal nonprofit, their staff, executive director, actually review Form 990 to make sure that it's correct? So we want to have a policy in place because the IRS is asking for it, and we need to tell the IRS how we do it. Now, the other piece of this question asks about, have you provided a completed copy of Form 990 to all members of governing body? So an answer before filing this form. So to answer this, yes. A completed copy of Form 990, which means all forms and schedules. So that means all schedules. So Schedule B, that includes contributors' names and addresses, has to be included. I have run into a few organizations that don't want to provide that to their board, which I disagree with. I think that's very important. The board should know what's going on there. But you have to make sure it's a completed copy. It needs to be provided to all board members, and it needs to be provided before filing Form 990. The board does not have to necessarily approve or vote on it. This form just needs to be made available to everyone to answer this question, yes. So you can email a copy of this to all your board members before it's filed, and we can answer this question, yes. Number 12 asks about a written conflict of interest policy. So if you don't have one of those in place, I strongly encourage that you put one in place. But it also goes on to not only ask if you have one in place, but number 2, are all key employees, board members, executive director, are they required to complete it annually? And then also it asks, how does the organization monitor and enforce compliance with the policy? So simply just not having a policy in place isn't going to cut it. How are you actually making sure that these conflicts, that everyone is aware of them, should they happen, or how are they addressed? Number 13 and number 14, do you have a written whistleblower policy? Do you have a written document retention and destruction policy? These are 2 items that actually came out of the Sarbanes-Oxley Act. Over 20 years ago, that applied to nonprofits as well. So if you do not have a whistleblower policy or document retention destruction policy in place, I strongly encourage that you put one in place. If you need copies of any of these policies that we're talking about today, please feel free to reach out. We have templates that we are happy to provide you. No use reinventing the wheel when we already have those, and we're happy to give them to you, and then you can just tailor them to your organization. Number 15 talks about the process for determining compensation of your executive director and key employees and officers. The IRS is very, very big on officers' compensation, making sure that the executive director, the CEO, is not receiving excess compensation. So in our area in the Midwest here, that's not usually an issue, but still we need to make sure that we follow it, and we need to make sure that we have a written plan and policy in place in determining that written compensation, which we'll talk about in a little bit. And then finally, this last section here, 18 and 19 talks about, again, public disclosure. So I mentioned that Form 990 is available, open to the public. So we need to make sure our Form 990 is available to those who ask for it. But also your tax exempt application, which you filed when your organization first became in existence many, many years ago, that's actually open for public inspection as well. So if someone comes and asks you for a copy of that, you need to actually provide that as well. Now, the IRS also asks if you make any of your financial statements or your conflict of interest policy or other governing documents available. This is not necessarily a requirement. Some organizations are happy to do so. They feel that by providing these items, they're being more transparent. However, other organizations do not feel that this should be open to the public, so they do not provide a copy of their governing documents and financial statements, which is perfectly fine. The IRS is just asking you, if you do provide any of these, how do you do it? Which ones do you provide to the public? So again, here's a summary of some of those policies that we talked about that the IRS is asking for. So again, not necessarily required by law. However, they are asking for them. So it's really, they probably want you to have them in place, and it's really a best practice to have these in place as well. So I mentioned briefly about compensation. So the IRS just asked how you determine the compensation of your key employees and officers. Well, they actually ask you then to tell us what that is. So in this part of the Form 990, we have to list all officers, directors, trustees, key employees, and highest compensated employees. Now, there are specific explanations, descriptions, definitions that the IRS has for each of these. So when we say officers, current officers or directors, that's your board. So anybody that served on your board of directors at any time during this tax year, we have to list all of them. Now, we also ask for current key employees. So key employees are those individuals that hold certain responsibilities, but they also receive compensation of greater than $150,000. So if you do not have any employees that receive more than $150,000, you have no key employees to report, even though you might think they're a key employee to the organization because of their role and responsibilities. But for key employees for the IRS, they would not suffice. Same way with highest compensated employees, we're looking for those employees that are paid over $100,000. So don't just list your highest compensated employees. Again, there is a specific definition that the IRS is looking for. Same way with former officers and former directors. So for most organizations, this list here is going to include anyone that served on the board of directors at any time during the year. You're going to note what their title is. So if they're a director or if they serve as an officer, the board chair, vice chair, and so forth. And then also your executive director or your CEO should be listed here. You also need to list any amount of salary and benefits that are paid to these individuals here. The salaries and benefits here are those that are listed. Salaries are per the W-2 for the year. So you want to make sure that you get that correctly on here, or any 1099. So again, this is open to the public, so we want to make sure that it's reported correctly. I mentioned briefly that the IRS is very big on officers' compensation. This is an area that has had a lot of issues with over the years, and it's really on the organization to ensure that the officers' compensation is being done correctly. So first off, the IRS requires that the organization pay a reasonable compensation. So there's a specific kind of definition that they have, that the amount would ordinarily be paid for similar services by a comparable organization under comparable circumstances. Also, you need to document how you're establishing this reasonableness. So really, the best case is to have a committee, whether it be the executive committee or you have an HR committee. You have a committee that actually reviews your CEO, executive director's compensation. They also need to look at comparable organization salary. So if you look up other organizations that are comparable to your organization within a similar geographic area, if you're in Indiana, don't look up an organization in California. It's not going to be comparable. But you can use that as comparability data. I know that the community foundations and there's another organization that puts together like a Northeast Indiana salary guide. I believe there's a Central Indiana salary guide as well that's out there on the IRS. You could use that. So you need to look up comparability data and you need to document it. So why are we paying this person this much? This also includes benefits. So any payments that you're paying, salaries, benefits, retirement, all of that stuff needs to be documented as to the reason why you're paying them. And then obviously we need to report it on Form 990. There are penalties for excessive compensation. So again, best practices: implement a policy, conduct a regular compensation review by that committee that you have in place, maintain documentation. It needs to be approved as well. And if you have questions or concerns, ask your attorney or your accountant for assistance. Because again, I said that this is a really big area that the IRS focuses on. And you might not think it's a big issue in this area, but you just want to make sure that it's documented, approved, and such as required by the IRS. So if somebody were to come back and question it, you have documentation as to why you're paying that person an X dollars for their salary, for the benefits, and why. Okay, moving on. Next section is the basics, the financial statements. So we really haven't talked about any numbers up until this point. So once we get to this part, this is really where the first numbers come. So these are your financial statements. This is your statement of revenue, and it kind of categorizes your revenue by different types. So we have contributions and grants, then we have program service fees, other revenues, miscellaneous revenue, as you can see. We also need to categorize it, whether it's unrelated business income or if it's related to our purpose, our exempt purpose on here. One thing you will notice though, if you're trying to tie back your amounts that are reported on your 990 to your audited financial statements, or even your internal financial statements, in-kind services and facilities are not required on Form 990. You don't report them. The IRS they don't want to know about them. So in-kind fixed assets, in-kind materials, supplies, those are recorded, but in-kind services and facilities, they're not recorded. So that's going to be a difference. Also, if you have any unrealized gains and losses from investments, they are not going to be reported on this page with revenue like they probably are on your financial statements. That is reported in a different section. So just be aware that if you're trying to tie those two back, there are some reconciling items between your financial statements and the 990 that you might have to consider. Then we go on to our statement of functional expenses. So again, just like on your audited statements or your internal statements that list all of your different types of expenses, we have to report that to the IRS as well. On the left side here, we have the different types of expenses. So we show the natural classification. And then on the right across the top, we have the total expenses and then by function, program, management, and general and fundraising. As you're, I'm sure, aware, all nonprofit organizations are required to allocate expenses by these three programs. I guess I should take that back. There are certain types of organizations. All 501c3s have to allocate this on the Form 990. However, there are other certain non-C3 organizations that are only required to report total expenses. But in general, it's best practices. You should probably allocate the expenses. When you're looking at this, when someone looks at the Form 90, whether it be a funder, a possible donor, watchdog groups, they're going to look to see how much of your expenses are put into each of these columns. So how much are you spending on program? How much are you spending on management in general? And how much are you spending on fundraising? Usually 65 to 70% spent on program is kind of a good baseline to look for. However, it's going to vary on the organization, what you do, how old of organization you are. If you have a capital campaign going on, you're going to have more fundraising. If you're a very young organization, you're going to have more management in general. So make sure that you consider that when you're out looking at that. Next is your balance sheet. So just like on your financial statements, we're going to have the balance sheet. We have the assets, liabilities, and net assets. We show 2 years on Form 990. So we have beginning of the year and end of year. Next is a kind of a very small part after financial statements. Ask some additional questions about your financial statements and reporting. So the IRS, they want to know if you have a compilation done or a review done or an audit done. So, these numbers that you're reporting on your 990, have they been compiled or reviewed by an independent accountant, or have they been audited? I think they want to know, how valid are these numbers? Also, do you have a committee that assumes responsibility for the oversight of the audit and review of compilation? Now, again, you can only answer these questions yes if you've had an audit review or compilation done. If you're in the process of having one done and maybe it's not complete, you would have to answer no, but you could add an additional explanation later on in Schedule O to say that one is in process. The IRS also wants to know if you were required to go to have a single audit done. So that's what question 3 is asking. So certain organizations that expend more than $750,000, which recently that's been increased to $1 million in a tax year, have to have a certain type of audit done, a single audit. So the IRS wants to know, hey, Were you required to have one of those done? And did you have it done or not? So again, more information than just the financials. The IRS wants to know whether you're following those required reporting requirements as well. So that's kind of an overview of the basic form, to the key things to look at for your organization. Let's look at some of the additional schedules here. So Schedule A is really a schedule that most organizations have to complete. This talks about your public charity status. Okay, so this can get very confusing. So basically, when an organization, a nonprofit, goes to the IRS and says, hey, please, I would like to be a tax exempt nonprofit. And they say, okay. So they're going to say that you are either going to be a public charity or a private foundation. That depends on where you get your funding from. So if you get money from a whole bunch of different sources, a whole bunch of different individuals, foundations, fees, you're getting support from the public in general. So you are publicly supported. If your organization is getting money from one source, for example, one family that starts a foundation, or from a very few foundations or very few donors or very few other corporations, you are considered a private foundation. The reason that this is so important is that there are different rules for public charities and private foundations. Now, organizations that go and apply to the IRS as a private foundation, that's fine. They want to be a private foundation. They are going to have to file the 990-PF. There are excise taxes that they have to pay. They have to distribute a certain percentage of their assets every year. They know that. That's what they want to do. That's what they want to become. However, organizations that want to be a public charity that don't want this other status could potentially lose their public charity status and default to becoming a private foundation. That is not what most public charities want. They do not want to become a private foundation where they have to file 990-PF, where they have to file or pay for excise taxes, where they have to distribute 5% of their assets. That is not what they want, but sometimes it happens. So Schedule A is filled out every year with Form 990 to determine whether those nonprofits that have been determined a public charity continue to be a public charity. So again, there's different rules. So that's why it's so important to make sure that your organization, if it was a public charity, if it's a public charity, that it continues to be a public charity. So if we look at the first page of Schedule A, the first part here basically asks, why is your organization a public charity? So most organizations fall under number 7 or number 10. So number 7, you receive normally a substantial part of your support from a government unit or from the general public. Or number 10, that you normally receive 33 1/3% of your support from contributions, membership fees, gross receipts from activities related to exempt functions, and so forth. So if you receive some program service fees as well as contributions, you're probably going to check number 10. Now, you're only going to check one of these boxes and it doesn't change. So like whatever this box is, like if you're a 7, that's what you are. You're always a 7. Or if you're a 10, you're always a 10. So you need to know which one of these boxes you are, and it will say on your IRS determination letter. So first thing, you need to know which box to check. If you are a 7, you're going to complete part 2. If you are a 10, you're going to complete part 3. Now, there are other ones that are on this schedule, but we're not going to focus on those today because again, number 7 and number 10 are the main organizations that most organizations fall under one of these. Part 2 and part 3 are very similar, but they're a little bit different. So if we look to part 2, so again, this is those number 7 ones that get a lot of their support from contributions. This is the bottom section of that schedule, part 2. The key here is line 14 and 15. The percentages on line 14 and 15 need to be at least 33 1/3% in order for your organization to continue being considered a public charity. If the percentages on 14 and 15 fall below 33 1/3%, That means that you are getting less than 33 1/3% of your total revenue from the public, which means that you are no longer considered a public charity and therefore will be reclassified to a private foundation and have to file 990 PF, pay excise taxes, and follow all of those additional rules. So as you can see, there's some additional questions though afterwards. So I'm going to talk about the actual calculation that's done in a minute, but so you do this calculation and come down to this percentage. If for some reason you don't meet this percentage, let's say the percentage is less than 33 1/3%. This part in part 2 does give you an opportunity to answer a facts and circumstances test. So here you have to explain to the IRS the facts and circumstances around your organization as to why you think you are still publicly supported, even though that percentage is below 33 1/3%. So for example, where are you getting your revenue from? Where are you getting your contributions from? What are your fundraising plans in the future? They want to know that, and you have to explain that to them. If for some reason you cannot explain that, and you are less than 33 1/3% on 14 and 15, then you would have to check the box number 18 that you are a private foundation. And as you can see, this box here at the bottom is from the instructions. And it does say that if the organization did not check a box on line 13, 16, 17, which you did not meet the 33 1/3% rule or the facts and circumstance test, you do not qualify as a publicly supported organization for this tax year, and you are considered a private foundation for this tax year. Okay, so let's move on to part 3. So for those organizations that were a 10, so you get a lot of your revenue from contributions and grants, but you also have some program service fees. You have to fill out part 3. So again, the calculation is very similar, but on here we're looking at lines 15 and 16. We want lines 15 and 16 to be more than 33 1/3%. If it is less than 33 1/3%, you did not meet that 33 1/3% test. However, as you can see in this section, there is no facts and circumstances test related to this section. So you do not have an opportunity to explain to the IRS why you think you are going to be considered a public charity. And you have to answer number 20. You have to check that box and say, yes, you are a private foundation. The reason I wanted to spend some time on this is that this is such an important piece of your organization. You do not want to become a private foundation if you are a public charity. It is very difficult to be reclassified from a private foundation to a public charity. So it is very important that you watch this percentage on your 990. So go back and look to see what that percentage is. If it is dropping, that is not a good sign. So here is the test that the IRS does, and this is for both sections. We look at the public support divided by the total support, and if it is 33 1/3% or more, you've met the test. That's great. However, it's not as simple as that. There are lots of different pieces that we have to look at. For example, the public support means something different in part 2 and part 3. Also, there are caps on the amount of contributions included from certain donors. So it's a very complicated calculation that's done. The key here is that, number 1, you need to be aware that this calculation is done every year. Number 2, you need to know what your percentage is for your organization. And if it is decreasing, that's probably something that we need to be concerned about. Now, if it goes from like 85% to 80%, that's not something to be concerned about. But if it is significantly dropping, we need to be concerned about that. The other thing is you need to know where your organization's support is coming from. Because if you get a really large grant from a private foundation, an individual or a corporation, that could potentially upset this public support ratio, causing a loss of public charity status. So for example, if you suddenly one year get this huge grant from a private foundation that you've never gotten before, that could totally skew your percentage, and that could have a huge impact on your public charity status. So again, I'm not expecting everyone to know how to calculate this, but you just need to be aware of it and know what your percentage is, because this is probably one of the most important pieces of the Form 990, because it does make sure that you are still a public charity. Okay, so, and if you have additional questions on that, please feel free to contact us. We can go over specific questions that you have specific to your organization. I just wanted to go over to, because it is such a big deal with nonprofits. Okay, next schedule I wanted to talk about is the Schedule B, which is the schedule of contributors. So this is the schedule that lists certain donors. Basically, it's $5,000. It's those individuals, those not, I shouldn't say just individuals, those donors. So it could be foundations, individuals, corporations, other nonprofits that give a total of $5,000 or more, or 2% of the total contributions and grants. It depends. They need to be reported on this form. So this is what the form looks like. So it's basically just a list. So you're going to put the name and address here and then the total contributions. A couple things to note. The IRS does not like anonymous. They believe that if a nonprofit receives a contribution from someone, they should know who that comes from. So I mean, you can keep it anonymous from the public. However, the IRS really thinks that you ought to know where that's coming from. Again, this Schedule B is the one schedule that is not open to public inspection. So the dollar amounts in column C are, but the names and addresses, they should be redacted, taken off the Schedule B when you give a copy of your Form 990 to anyone outside of your organization requesting a copy. The other thing to keep in mind is donor advised funds. Donor advised funds are becoming very popular in recent years, which is great. Donors use those to give money to organizations. However, when you are listing donors on this form, the contribution is coming from the donor advised fund, not the individual. So if I were to give a grant to a donor advised fund, say, let's say a donor advised fund that I set up at the community foundation, and then I tell them, hey, let's give $10,000 this year to ABC organization. When ABC organization completes Schedule B, they need to put the community foundation as the donor on this form, not my name. The donation should come from the donor advised fund. So if you have a lot of different individuals that are giving money to a donor advised fund, and then the donor, like multiple gifts from a donor advised fund, those all need to be added together and put on this form. So that's why it's really important when you are tracking your donations internally, that you're making sure you know who the donor is, whether it's the donor advised, whether it's a donor advised fund or whether it's an individual. So make sure that you are tracking that correctly. The other form that or other schedule I wanted to talk about briefly is Schedule O. This is a supplemental information to the form. Basically, it is a blank sheet. So the reason that this is so important is because sometimes there are questions on Form 990 that you have to answer yes or no to, but you want to provide some additional information. So this is where you can do it. So for example, when you're bragging about what your organization did and your program service accomplishments and it doesn't fit, you can use this as an overflow. Or for example, if you say, okay, I don't have this written policy in place, I have to answer the question no, but let's add an additional statement here that says after year end, we put this into place. So it really is an additional opportunity to clarify ambiguous or complex responses, to add additional information. And I really encourage people to use it if there's additional information that they want to provide to the IRS or the reader of the Form 990. Okay, so that is a quick overview over the Form 990 and specific things that you should be looking for. So I wanted to talk again about back to board members, because I know we have some board members with us, how they can help ensure accuracy and compliance with your organization's Form 990. So again, there's a specific question on Form 990 that asks whether the form was provided to the board before it was filed. we really want to answer that question, yes. So board members should review a draft of the 990 before it's submitted to the IRS to make sure it accurately reflects the organization's financial activities. And as we saw, the one statement asks who served on the board during this time period. So as a board member, my name is going to be listed on there. So if anything happens during this time period, my name is listed as a responsible person for this period. And so I want to make sure as a board member that the information that's being submitted and the questions on how they're answered are being answered correctly. So that's one of the reasons why it's so important to make sure that you review as a board member your Form 990. You might see something that you don't understand. Again, there's a lot of questions on Form 990, and it's asking things that you just might not be familiar with. That's okay, ask questions. If there's something you don't understand or you're unsure about, somebody else probably has the same question, but ask for clarification. That way we can make sure that there's no mistakes. You know, if your treasurer or your CFO doesn't know, maybe, you know, reach out to your accountant or your CPA, that your auditor that actually prepared the 990. They should be able to answer that question for you. Ensure the board has an opportunity to discuss significant items such as executive compensation or major program changes before they're finalized to Form 990. So again, when we answer that question, yes, that the board has reviewed Form 990 prior to filing, we just have to provide it to them. However, it's a really good opportunity to actually allow the board to engage in some discussion first to make sure that everyone is okay with what's being reported on the Form 990. Because again, it's a public document that is open to everyone, and we really want to make sure that the things are being reported properly. Also, board members should be familiar with the nonprofit financial practices, IRS regulations, to ensure they're making informed decisions when reviewing the form. So again, just making sure that you know, for example, what written policies should be in place, you know, what types of things should be reported, what your public charity status is, and that type of thing. So, you know, getting some additional training on what these requirements are, what Form 990 is, would be great for your board. And then I just want to end with some common mistakes to avoid on Form 990. As I mentioned before, there are different versions of Form 990. If you don't file the right version, the IRS is going to say that you didn't file a return properly. So you want to make sure that you file the correct version of the form, but you also want to make sure that the financial information reported on your form is accurate, reflects all income and expenses and assets. If you're on the accrual basis, make sure that the accrual balances are reported properly. Failure to disclose conflicts of interest. Board members must disclose any potential conflicts of interest. This is, you know, clearly stated on the Form 990. It asks about relationships. Lack of transparency can really undermine trust. Also, if you don't answer questions, that's considered an incomplete return. So for example, missing or incomplete sections such as a description of your programs, not answering questions about compensation, those can raise red flags with the IRS and the public. So make sure that all of the questions are answered properly. So again, you know, yes, you have to file Form 990 annually with the IRS because it is a requirement, but it is also an essential tool for maintaining transparency, accountability, and trust with your stakeholders. Again, we talked about board members, and as a board member, your role in reviewing and understanding Form 990 is crucial to ensuring that your organization meets its legal obligations and demonstrates its commitment to responsible stewardship. It's just so important to make sure that Form 990 is prepared properly because it is so much more than just a compliance tool. It can be a marketing tool. It can be used to generate grants and funders. It talks about so much more than just financial information. So making sure that all of the questions are answered properly is a really big thing to focus on. So I think we have a couple of questions here. I know Tyson and Audrey have been answering some. As far as 990s, certain organizations not having to file Form 990. Yes, if you are a church or a religious organization, you are not required to file Form 990 with the IRS. The IRS does have very specific definitions, though, of what a church and a religious organization are. So when you initially filed as a tax exempt entity, one of the reasons that you would have been tax exempt is because you clicked that box church. So if you are a church, then you do not have to file Form 990. There's another question about significant gift made by a foundation towards a capital campaign. Is that a concern for public charity status? So for example, $7 million for an organization that typically has $13 million revenue for an annual fund. Yes, so I would definitely want to look into that. Obviously, that is a big chunk of your normal budget there. But again, it depends on a lot of different things. There's also some calculations that you can do before accepting the gift to see how it's going to impact you. There is also a situation where you can determine if it is an unusual gift. Again, there are very specific restrictions that fall around an unusual gift. But if this, let's say, $7 million is a gift that you've gotten from somebody that has never ever given before, and they probably will never ever give again, and they just happen to give this year because it's a capital campaign, yes, you might be able to consider it an unusual gift, and then that would not impact your public charity status calculation. However, just in general, if I saw that, yes, I would be concerned, but I would definitely be looking into it. The other thing with the public charity status, if you are able to file the facts and circumstances test, I mean, that you can certainly explain the situation there. So in general, yes, I would want to definitely look into that, but I think there are some certain things that maybe that you could do that would not make you become a private foundation. So I think that is all of the questions that we have gotten so far. So I just, again, want to thank you all for attending. I did want to share a link on our website. You can go and sign up for future webinars. We have our recorded webinars there. We also have blogs that you can provide. This is all free. You just need to sign up so you can get the Zoom link. But we just make this available to nonprofits because we know that sometimes it's difficult for nonprofits to get free, good information on what's going on. We also try and focus on things and topics that we think are relevant to the organizations that we work with. Not necessarily, okay, this big standard is coming down and it's only for the very huge, nonprofits that, those large colleges that have huge endowments. So we want to really impact our organizations that we work with and think that will benefit from. So we just want to make that available to you so you guys know that that's out there. Also, since we are talking about Form 990, for all of you December year ends, your Form 990 is due May 15th. If you are November year end, your Form 990 is due April 15th. Again, you can submit an extension if needed, but just know that that is coming up to make sure that that you're aware of that. But other than that, I just want to thank you all for attending, and we'll see you next time.